everyone, and welcome back to another episode of the Market Outlook series of the Market Outlook series. I'm going to talk to you about Nifty minute time frame of Nifty. So let's now from a little bit behind. I'm going to cover from around the 28th of November, which is when I basically kind of have not been making the Market Outlook videos. So what we saw here was, or actually, let's go a little bit more behind. So what we saw is where we had the last discussion, right? So here we saw a big reaction in the market, right? Over here and over here. Why would I call this a big reaction? Because you can see that the market or Nifty basically what it did was it went extremely overbought as well as extremely oversold within pretty couple of days. And then what happened? We saw this was the marking of the bottom of the market. So typically you'll see when a new wave is starting, this kind of formation takes place or this kind of activity. This is basically the shaking out of the weak hands in the market. A very sharp decline comes in and then a rally. A very strong rally is then witnessed, correct? So we saw that on around the 21st of November, and there 23,500 basically acted as pretty good support. We created a bottom around 23,300 and we've been heading upwards. Now, some resistance and support levels have been mentioned time and again by me. The very first resistance that was mentioned was 23,900. So when the market approached this 23,900 level, what we can see is that the RSI here has gone extremely overbought, which typically is a signal that this momentum is very strong and is expected to continue. Right, so we got that signal. So 23,900, we checked into this resistance level. There was a massive gap up opening and we went up. Now, here again, there was another 24,300 or 400, 24,400 acted as a bit of a resistance from where we corrected back, or rather than a correction, let's call it a pullback. There was a pullback to this important support level of 23,900 and then we continued upward. Now look at the activity on the RSI. Here the RSI gave a small negative divergence. This negative divergence actually indicated that a pullback was due in the market. On the 3-minute time frame itself, we went back down to correct to the level of 30 and then created a positive divergence. So here if you see, the price continues to decline, but the RSI has created a positive divergence and then the rally began. When this rally began, as you can see, the Nifty on the 3-minute time frame itself was very shy of coming below the level of 40, which was a signal that this is a very rally that is unfolding, right? And has then repeated itself. How did it do that? First, the RSI started resisting the level of 60, which was a temporary bear or a range shift, we can say. Here again, it went extremely oversold and extremely overbought. Right, so this is basically the indication that another very strong leg of rally, just like the one that we witnessed over here, is going to unfold this point onwards. Um, that is something that I am hoping for. I think this resistance 24,900, this peak, when this peak gets broken above, then the real party will start. For me, 25,200 is where the key resistance, the next target on Nifty stands. Now let's move on to the 15-minute time frame. 15-minute time frame showing us. So on the 15-minute time frame, if I just readjust this chart, since this bottom onwards, again, here we can see a positive divergence had forged. The RSI actually gave a confirmation of a positive range shift on the 22nd when it went above the level of 60, right? So this positive divergence was the here. This high got forged and the confirmation of a new rally came when a higher high was formed and the RSI also went above the level of 60. So positive divergence itself is not enough to create, not to take a trade. By the way, on just yesterday, I posted a video on my YouTube talking about how to trade a positive divergence, RSI positive divergence, and I use Union Bank as a case study. So make sure you check out that video. I will also link it in the card above. Moving on. So here this indication, right? Now, Nifty again, like as I said, it took resistance or somewhere over here. This coincides with the previous, this one, right? If you zoom out, this is where it coincides. So this acted as a resistance. There was a pullback to the support 23,900, another leg of rally, and if you see during the pullback we barely even touched the level of 30, which was again an indication that there's a lot of momentum left in the market. And then another rally came, another pullback came, 40 acted as support, another rally came, right? When this rally came, a small negative divergence was noted. So here also if you see a negative divergence was noted, then a pullback came. Here again a small negative divergence was noted, and then a pullback came. So this was the very first support around 24,570. The market took support over there, but when the market tried to go back up again, it failed to forge a new high or even retest the previous high, which might go lower. So what was the next support? The next support was this high again, which acted as a pretty good support. There was a smidge, but that's okay. It acted as pretty good support. Same time, the blue line, which is the 20 EMA. So this is the blue line, this 20 EMA. This is the daily time frame, by the way, right? So this acted as a very strong support, and here also that let's shorten this. So for a very brief moment, the 15-minute time frame was signals. But again, a confirmation that we will wait for is for the establishment of a higher high with respect to this previous high. When this is established, then we can expect 25,200 to be achieved very soon in Nifty, which means more rally for the broad market. All right. Coming to the 75-minute time frame. So the 75-minute time frame is showing all things pretty good. I'm just going to remove all the drawings on the 15-minute frame. Since this bottom was forged, we can see here when the correction unfolded, 75-minute time frame gave very clear signals. When this correction unfolded, the 75-minute was clearly in a bear range, in the sense that on the downside it was going below the level of 30, and on the upside it failed to breach the level of 60 whatsoever. So this breaking below the level of 30 is usually an indication of a continuation in bearish momentum. What I can see here again is that the 75-minute time frame gave multiple positive divergences before the happened. Okay, the first positive divergence here led to a very small rally, but the high did not get breached very convincingly, and the 20 EMA also did not get breached. So this was an attempt, but a failed attempt. The second attempt was more successful, and this is very typical in RSI positive divergences. A healthy positive divergence, you will see the left tail of the divergence usually is not going to be below 30. If you see the left tail below the level of 30, as is the case with the first positive divergence, typically it will be a not a very successful positive divergence. It will not give you a massive upside. The maximum it typically goes is retest the previous high, does not establish a new uptrend. But if the price has stabilized to such an extent where the RSI is able to maintain itself above the level of 30 on the left hand side tail, and the right hand side tail, which actually forges the higher high on the RSI, is closer to the level of 40, that is a very high quality RSI positive divergence, and typically that does signal us about a reversal, potential reversal in prices, not just a retest of the previous high. That is what we are seeing here. And why would I insist on that? Because here we can see that in this downtrend, when this RSI positive divergence over here was forged, the high extremely, like right before this, you can consider this or this as the high, and both of them have been breached. So basically the this is actually the high which is right immediately preceding the RSI positive divergence, this high, right? So this becomes our key support level. What we are seeing here is that a higher high has been established by Nifty, and after this higher high has been established, it has come back down to pull back to this level, to this support level, and now started another rally. Now obviously this is going to act as a resistance, but once it is breached, we are expecting 25,200 to get tested. Why 25,200? Because if I extend this line to the left side, you can see it coincides with this high. Why is this high significant? Again, it is the high, it is the previous high. So this is one level, right? So this is time for a step up. So 25,200 becomes our next resistance level. When 25,200 gets tested, I would expect a pullback again to the level of around 24,800 or maybe 24,500, and then potentially the rally can continue, right? But for now, 25,200 is what we are looking at. Let's also take a look at the daily time frame. All right, coming to the daily time frame, what do we see? So the daily time frame is not really registering this decline as anything. What I am seeing here is that a bull trend continues, or a bull range continues in the on the daily time frame, and this bull range actually started all the way back from 22. Since then, the Nifty has not really even touched the level of 30, let alone breach it. And every peak that it has gone above the level of 60, even 70 plus. So this continues to look pretty bullish on the daily time frame, and I think this rally is definitely set to continue based on the observations that I'm making on the daily time frame. And speaking of the weekly time frame looks even more bullish than the daily time frame. So if you're in the market and if you're trading, swing trading like me, I think now is a very good time to get active, get aggressive, of course, with risk management in place. But the market trajectory, everything that I've observed on the technical charts, they all direct to a very, very bullish outcome, right? Let's move on now to Bank Nifty analysis. Nifty 52,200 was a key resistance, and we can see that resistance has now been breached. So let's put that down as 500. We can see the resistance has now been breached. In fact, Bank Nifty also gave a pullback to this resistance support level here. Also, the reversal in Bank Nifty, the correction started from 27 September, and this reversal has also begun with the signal of a positive divergence. Subsequently, a positive range shift actually came about around 21st, 22nd November, same time that the Nifty also gave a turnaround. And it looks like banking, at least private sector banks, have again become very, very attractive. My target on Bank Nifty would be this next trendline resistance around the level of 56,100. So let's change this 56,100, copy, paste and paste, right? So this becomes our next target for Bank Nifty. Now talking about the PSU sector, PSU banking sector, what are we seeing here? We are seeing that there was a negative range up to this point, and the PSU banking sector has just confirmed a new rally. So the first thing is that it established a higher high, but after establishing a higher high, it not pulled back to retest this higher high, it went back all the way to retest the previous low. Now in retesting this previous low, it actually breached the low a little bit, which was a call for us to, wait for further confirmation here. And the next rally that we can see basically again breached the previous high, but in doing so, after doing so, it also gave a pullback to the previous zone of, I would say, resistance for the PSU bank. So this is looking pretty attractive again. So I think even the PSU banking index is looking quite good with RSI positive range shift on the 75-minute time frame, a break above the 100 EMA, which is green line, the 20 EMA, which is the blue line, crossover of the 20 EMA and the 100 EMA, a pullback to the 100 EMA, and a bounce back, which also coincides with the previous peak right here. So all things are looking very attractive. Moving on to the auto sector, interesting. All right, so auto sector is something that I had warned you guys against in the very last video of the market outlook. So let's see what it looks like now. And here I can see there was a very strong positive range up to this point, which then got violated here. And here we've seen some wild moves where we're seeing lots of activity above the level of 70 as well as below the level of 30, giving mixed signals, right? So that is very typical of the very last of a rally we see, where the breakdown signal has already come. You still see a bullish behavior. This is what actually ropes in. This is euphoria on charts. This is what euphoria looks like, right? So after this, we can see that so actually I'm going to extend this line here. When it broke down below the 40, this is where it actually ends bear range, right? This coincides. See, this was a strong support level for the auto, um, right? And then once it broke below the level of 40, that is coinciding with the 20 EMA level, negativity started to set in. And even now, I would say it is trying to forge a bottom, but it's not quite there. I would like to see it sustain above this entire zone. So I'm going to set an alert here using a shortcut, right? And I'm going to write the message higher high. So when this gets established, then I will start looking at the auto sec potential long positions. But right now, um, the thing is that auto sector has already given such a strong rally that I wouldn't be very surprised if it fails to sustain above the higher high and then gives another leg of downside here, basically continuing in this bear range for some more time. Let's not assume anything. Let's just wait for this to direct us better. Coming to CNX commodity, again, bear range has established. I can see the bottom established on the RSI, but is it a real bottom? We don't know because we don't have either a higher high, which is we need the price to go above 980 to establish a higher high. And with respect to the RSI, sure, it tried to go above the level of 60, but I wouldn't say it really sustained. In fact, I see a negative divergence right there. So I am not very convinced that CNX is or commodity sector is something that I would be interested in. Now, talking about the consumption sector, there is a double positive divergence, and it looks like we are resisting the level of 60, but also we've taken support at the level of 40, right? So I already have an alert set here for a higher high. So I would like the consumption sector to give me better signals to actually make a position in here. But if the overall market is actually has come into a sustainable bull trend, which is what I think it has, then the consumption sector is should catch up, right? So consumption sector, again, I will wait for a little bit more confirmation. It's not looking as bullish as the banks, but there is potential here. Now, coming to the energy sector. The energy sector has been pretty bearish. There's been massive action. And right now, I'm not really seeing any significant bullish signal out here. So I'm going to move on to the next one. Finance, CNX Finance. So just like the banks, the CNX Finance is also looking pretty good. I can see a double bottom formation right here. I can see a positive divergence formation right here. I can see also that a higher high has been established, a pullback has been established. This looks like the beginning of a new uptrend. So yes, CNX Finance sector also looks pretty attractive for making fresh positions. Oh, FMCG. Okay, so what are we seeing in FMCG? A double bottom retest and formation of an RSI positive divergence. This was a very negative range, still in a very, very negative range. And I would like the FMCG to actually establish a higher high above the level of 58,000, right? When it does that, then I'd be very happy to create fresh positions in FMCG stocks. I could also create positions now with this low as my stop loss. Typically, stocks I would expect, especially the larger FMCG stocks, which have a dominating effect on the index, to have very similar charts to what we are seeing. Correct. Moving on to CNX Pharma. So again, CNX Pharma took action after a massive rally, and it looks like it is ready to start rallying again. And why would I say that? Again, similar observations, very simple technical analysis. Higher high has been established, pullback has been established. However, this pullback seemed to have gone a little bit below this higher high formation, or rather the previous high support level. But then again, if you notice, there is a pretty nice little positive divergence over here, and then we are seeing continuation. So this CNX infra, the infra sector also is looking pretty good. IT sector, oh wow, IT sector is doing absolutely fabulous. All right, let's see. Here we can see a nice bull range has been established, a nice rally also has been established, and well, IT sector is ripping and it is expected to continue to rip. Media sector, let's see, I am not a very big fan of the chart, so we'll move on. What are metals saying? Metals are showing a positive divergence, correctly so. After this positive divergence formation, we can see rally established, but higher high yet, right? Higher high, and this is a double bottom of sorts. Well, simply because this low is actually lower than this low, so wouldn't really call it. All right, metal sector, not very clear right now, but I think we have other sectors which are looking pretty good. Pharma, oh, pharma is looking attractive. It looks like it is ready to continue that rally, which it ended with a clean little negative divergence. The thing with pharma is that technically it gives very good signals, and we can see there was a positive divergence and a higher high has also bridged here, right? And it has come back to kind of test this trend line. Now, why is this trend line significant? If I show you the history, you can see clearly why this trend line is important. It has lots of touch points, lots of reversals have happened around here. So this time I expect it not to be a story. Looking extremely positive, right? Now coming to the PSE sector. PSE sector is actually where a lot of retail traders have their heart, because a lot of retail traders stuck in the PSE sector. This was the first sector to actually top out in the month of August, and it has corrected massively. However, from a long-term perspective, PSE continues to remain pretty attractive. I can see the 75-minute time frame has established a positive divergence. But remember, PSE sectors are super trending stocks, which means they get into a trend and then they stay in a trend. So even the downtrend that has been unfolding, the stoppage of that unfolding downtrend and the beginning of a bull trend is going to take time. So you need to be patient. Correct? But I think the worst is behind us. And if the PSE does fall, I would expect it to probably retest the low, not establish any further corrections, because I can see some positive divergence over here. However, of course, if the low does get breached, then you should expect more correction there. But if you look at this PSE index chart, based on the trend line trajectory, it seems like it has come all the way from the very, very top trend line trajectory to the very, very bottom support trajectory, which it is showing around 20% decline in from top to bottom. I wouldn't expect any further correction over here, but let's see. And I would also expect support to come in at 98.60 should it choose to go back down further. I am going to move this and I'm going to change this a higher high right above the previous high. So I think there is potential in PSE, but I wouldn't jump into it right now. I would wait and watch. Let's come down to the realty sector. What do we have here? We have a positive divergence, we have a higher high, we have a retest of the higher high, another rally. So I think it's looking pretty attractive, and the realty sector is set to continue this massive, beautiful rally that it has been unfolding, which, by the way, it took support right at the 250 EMA. Beautiful. It also took support at the level of 40 on the daily time frames RSI. Again, beautiful. Textbook, fabulous observations over here, fabulous develop. All right, so from a shorter perspective, I want to look at this intersector comparative chart, and let's see who's leading or who led the last week. So since Monday's opening, we can see CNX IT was on a total rip, 3% up in just 1 week. Consumer durables close behind, service metals Although pharma, I would say pharma and healthcare have a pretty good chance of catching up. Bank Nifty PSU also expected to do better. Infra is also expected to do better. Let's stay a little bit away from energy, PSE, and beans. So yeah, it all new leg of uptrend, I would say, and think about the market. I had that I'm back to trading. I took like a 1 week off for personal reasons. I just had a little baby girl, Eva Agrawal, on the 29th of November, and that is also why you were not seeing any lives from me. But now I'm back to work and I'm trying to get back to making more content. So make sure that you leave your comments and make sure you join my channel because my updates and my analysis may not trickle down to other social media platforms based on my time availability because I'm really, new life here, new of life here. But you will definitely see me Telegram channel. So I'll just show you my Telegram channel super quickly. Kavita is what it is called. There are some imposter channels. You want to be very careful. Just write trade with Kavita. This is the image or the display picture that you want to go for. This is the description that you will see. I don't give any FNO trades. I do give analyst comment on Nifty every day, but I don't ever tell you to trade in options or futures or anything of that sort. There are, by the way, no trade recommendations in this channel. I don't give free trade recommendations at all because I take responsibility for my trade recommendations. So I will make sure I always give you follow-ups with respect to stop loss targets, trailing stop losses on any active trade that I post to you, which only happens in my premium channels of the Tradegram. In my channel, you will get quizzes which will help you enhance your swing trading and technical analysis knowledge. You will get my video links. So like I said, I made a fresh video on how to trade RSI positive divergences, how to manage your trades, your risk, what are those scenarios that you should look out for, that you should be prepared. We used Union Bank, as I said, as a case study there. So if you want to watch that video, again, just go to my Telegram channel. Right? Every day I post my comments, like I said, on Nifty and what is expected next. Also, to celebrate my baby girl, I have extended all existing members subscription by 2 months absolutely free. It's a gift. If you also want to be part of my growth, you're welcome to subscribe. And if you subscribe before the December 16th, you will also get this 2 month free extension on your subscription, no matter whether you are joining quarterly, annual, right? So that's just putting that out. All information, if you even want to book a call with me, my Telegram channel is how you do it. So you go on Telegram and you see this book a call link. You just click on that and you book a call. It's as simple as that, and I'll be very happy to guide you with whatever it is that your guidance, right? So with that, this video comes to an end. Thank you so much for giving me your time and your attention. I will see you in the next video. I post that. I will try my best to share more technical and swing trade related knowledge as much as I can with you all.